Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Billion Industrial Holdings Limited annual report. Billion Industrial Holdings Limited offers a diverse range of businesses and services across various industries. The company's primary focus lies in the manufacturing and sales of polyester filament yarns, polyester, and ease fiber products both domestically and internationally. The company provides a variety of yarn products for consumer goods, including drawn textured yarns, fully drawn yarns, partially oriented yarns, and special products such as cotton-like polymer fiber and ultraviolet-resistant polyester. These yarns are used in the production of high-end fabrics and textiles for apparel, footwear, and home furnishings. In addition to yarn products, Billion Industrial Holdings Limited also offers industrial polyester yarns and a range of polyester film products. The company's film products include metallization base film, printing base film, transfer base film, heat sealable film, twistable film, anti-static film, electrical insulation base film, card lamination base film, hot stamping base film, metallic yarn base film, reflector base film, holographic base film, electronic releasing film, coating film, and solar base film products. Furthermore, the company offers polyester bottle chip, which is a byproduct of its manufacturing process. Overall, Billion Industrial Holdings Limited's business operations span across various industries, including textiles, consumer goods, and industrial materials. Billion Industrial Holdings Limited market capitalization of $10 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Billion Industrial Holdings Limited holds a significant advantage in their industry. Billion Industrial Holdings Limited trades at a higher price-to-earnings ratio of 11 times, and a higher price-to-book ratio of 0.76 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price to value than it appears. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap? The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 2.18%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On the positive side, revenue growth is attributed to several key factors. The production and sale of polyester filament yarns products have seen a significant increase of 28.6%, while ease fiber products have grown by 23.7%. Differentiated products account for 59.1% of total revenue, indicating a strong focus on innovative and high-value offerings. Improving product quality and production efficiency, as well as enhancing innovative capability, have also contributed to revenue growth. Market competitiveness has played a crucial role in driving sales, particularly in the polyester bottle chip segment, which saw an increase of 10.3%. The expansion into other provincial and municipal markets, overseas sales rebound due to regional distribution, and joint exploration of 5G business opportunities with China Mobile have also contributed to revenue growth. On the other hand, revenue decline is primarily attributed to a decrease in polyester filament yarns products by 22.7%, as well as a decline in polyester products by 8.2%. The POY segment saw a significant drop of 73.1%, while other polyester filament yarns products decreased by 40%. Overseas sales also declined by 11.3% due to regional distribution remaining similar to the previous year. In conclusion, revenue growth is driven by innovative and high-value offerings, improving production efficiency, market competitiveness, and strategic expansion into new markets. Revenue decline, on the other hand, is primarily attributed to a decrease in polyester filament yarns, products, and polyester products. The net income of the company experienced a decline in both instances, with a decrease of RM$135,911,000 or 8.6% from 2024 to 2025, and a more significant drop of RM$104,705,000 or 14%. This indicates a downward trend in the company's net income over the two-year period. The profit margins also underwent changes, with some products experiencing an increase while others saw a decline. Polyester filament yarns witnessed a decrease of 2.2 percentage points from 11.2% to 9%, whereas polyester products showed an improvement of 1.7 percentage points from 5.1% to 6.8%. However, the gross profit margins for EASE fiber and polyester products declined significantly, from 7.8% to 2.3%, and from 6.8% to 5.1%, respectively. The reasons behind these changes in net income and profit margins are not explicitly stated in the provided text. However, it can be inferred that the decline in gross profit margins for certain products may have contributed to the decrease in net income. The company's financial performance indicates a significant issue with its operating cash flow. According to the extracted summaries, the net cash used in operating activities is RM$95,469,000, which clearly suggests that the company is generating negative operating cash flow. This means that the company is using more cash than it generates from its operations, indicating a potential problem with its financial health. The company's debt level and interest expenses have undergone significant changes. A notable increase is observed in the total liabilities, which rose from an undisclosed amount to RM$14,138,351,000. This substantial growth is also reflected in the bank loans, which increased from an unspecified figure to RM$91,636,000. However, a contrasting trend is seen in interest expenses. While the interest on bank loans has risen significantly, increasing from RM$22,938 in 2024 to RM$56,769 in 2025, other interest expenses have decreased. The company's other interest expenses dropped from RM$121,348 in 2024 to RM$55,333 in 2025. This mixed trend suggests that the company is experiencing a complex financial situation with both increases and decreases in debt-related expenses. The performance of various regions and segments in the market has been analyzed, revealing both positive and negative trends. Regions that performed well include Vietnam, Fujian Province, and Guangdong Province, indicating strong growth and success in these areas. On the other hand, there is no mention of any region or sector performing poorly overall. However, within specific markets, some segments showed decline. In the domestic market, Fujian Province saw a decrease from 46.3% to 42.6%. Additionally, Vietnam's overseas sales experienced a slight drop from 5.5% to 5.9%. Management's outlook for the company is optimistic, with a focus on strategic growth. The company intends to hold unlisted equity investments for long-term purposes, indicating a commitment to expanding its portfolio and increasing its market share. In terms of expansion, management is investing heavily in new production facilities in Vietnam and China, which will enable the company to increase capacity and expand its product offerings, particularly in the synthetic fibers market. This strategic move positions the company for future growth and increased competitiveness. Management also plans to finance this expansion through internally generated funds and bank loans, demonstrating a commitment to prudent financial management. Furthermore, they are confident in the medium and long-term business development of the textile industry, citing a well-founded industry as a key driver of their optimism. Overall, management's strategy is centered around strategic investments, capacity expansion, and prudent financial management, all of which are aimed at driving future growth and increasing competitiveness in the market. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out a final dividend per ordinary share for each year, with a proposed final dividend of $0.10 per share for 2025. This demonstrates the company's commitment to rewarding its investors. In addition to paying dividends, the company has also engaged in share buybacks, repurchasing and canceling shares in both 2024 and 2025. The significant number of shares canceled in these years suggests that the company is actively managing its capital structure and reducing its outstanding share count. This strategy can help to increase earnings per share and improve the overall financial health of the company. That concludes the financial summary for Billion Industrial Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.